On the journey towards financial independence, one of the key pieces is passive income. While active income requires your continuous time and effort to generate earnings, passive income offers the freedom to earn money steadily without the need to dedicate endless hours of work. It's like planting seeds that, once sown and nurtured, continue to bear fruit without requiring your direct intervention. In this video, we present a comprehensive guide aimed at exploring 10 diversified investments capable of generating $1,000 per month in passive income. The purpose of this roadmap is to provide a broad and practical view of the various opportunities available to those seeking to build a stable source of financial gains aligned with their goals of freedom and financial security. The variety of options presented in this roadmap is a crucial point to highlight. It's not just about suggesting conventional investments, but also about exploring innovative and accessible alternatives for different investor profiles. From online ventures to physical investments, each of these options offers a unique path to achieve the coveted monthly passive income of $1,000. Throughout this video, we will delve into practical examples and specific strategies for each type of investment, providing viewers with a clear and actionable map to start their journey towards financial independence. Regardless of your current circumstances or level of financial knowledge, there is always an opportunity for you to begin building your financial future in a solid and sustainable way. So, get ready to discover how to turn your dreams of financial freedom into reality by exploring the various possibilities offered by the 10 investments presented in this video. It's time to take the first steps towards a life of financial security and freedom to live your dreams. 1. Property rental investment. Generating passive income with real estate assets. Investing in property rentals is one of the most traditional and profitable ways to generate passive income. The main source of profitability lies in the continuous demand for residential and commercial spaces, ensuring a steady flow of rents. Profitability of property rentals. Property rentals offer a stable source of passive income due to the growing demand for housing and commercial spaces. While residential rents provide regular income for tenants seeking accommodation, commercial rents offer additional profit opportunities, especially in high-traffic areas and economic growth areas. Practical examples. In the context of residential property investment, investors can acquire apartments, houses, or condominiums to rent to tenants in search of housing. These properties can generate stable monthly income and, with the appreciation of the real estate market, can also offer long-term capital gains. On the other hand, investing in commercial properties, such as shops, offices, or warehouses, can be an attractive option for those seeking to diversify their investment portfolio. Strategically located sites can attract tenants willing to pay higher rents, significantly increasing investment return. Highlight for short-term rental platforms. An additional strategy to maximize earnings from property rentals is to use short-term rental platforms such as Airbnb. These platforms offer property owners the opportunity to rent their properties for short periods, often at higher prices than traditional long-term rentals. This can result in even more substantial monthly income, especially in tourist and busy urban areas. 2. Vending machines. Generating passive income through automation. Description of profit potential of vending machines. Vending machines represent an excellent investment opportunity for those looking to generate passive income through automation. These machines offer a variety of products such as snacks, beverages, and coffee, which are easily accessible to the general public. The profit potential of vending machines lies in their ability to operate 24 hours a day, 7 days a week, without the need for direct supervision. This means that once installed in strategic locations, the machines can generate continuous earnings even during periods when the investor is not actively involved in the business. Practical examples of vending machine investment. There are several options for investing in vending machines, covering a variety of products. For example, investing in snack machines can be a solid choice for high-traffic locations such as offices, schools, or shopping centers. Similarly, beverage machines can be installed in locations such as gyms, public transportation stations, or recreational areas. Additionally, investing in coffee machines can be especially profitable, considering the growing demand for quality coffee in workplaces and public spaces. Suggestions for finding strategic locations and maximizing profits. To maximize profits with vending machines, it is essential to find strategic locations with high foot traffic. This can include busy areas such as shopping malls, train stations, hospitals, universities, and large companies. Additionally, conducting detailed market research to understand the preferences of local consumers and adjusting the product mix of the machines according to the specific demands of each location is important. Keeping the machines stocked and in good working order is also essential to ensure customer satisfaction and maximize long-term profits. 3. Investment in real estate investment funds, REITs. Diversification and passive income without complications. Explanation of how REITs provide passive income without the need to buy physical properties. Real estate investment trusts, REITs, offer a convenient and accessible way to invest in the real estate market without the need to buy physical properties. Investors can purchase shares of REITs, which are funds composed of a diversified portfolio of real estate assets, such as offices, logistics, warehouses, shopping centers, among others. The income generated by these assets is distributed to shareholders in the form of dividends, providing a stable source of passive income. Examples of funds that invest in different types of properties. REITs offer a variety of investment options covering different segments of the real estate market. For example, some REITs invest in commercial properties such as offices and shops, while others focus on residential properties such as condominiums and apartments for rent. Additionally, there are REITs specialized in specific segments such as hospitals, universities, and logistics warehouses. This allows investors to diversify their investment portfolio according to their preferences and financial goals. Highlight for the ease of investment and diversification offered by REITs. One of the main advantages of REITs is the ease of investment and diversification. By purchasing shares of an REIT, the investor automatically becomes a partial owner of the properties included in the fund's portfolio, without the need to deal with operational management or asset maintenance. Additionally, since REITs are traded on the stock exchange, investors can easily buy and sell their shares, providing liquidity and flexibility to adjust their positions according to market conditions. 4. Online ventures, exploring the digital world for passive income. Exploration of online passive income opportunities. Online ventures offer a unique opportunity to generate passive income by leveraging the reach and accessibility of the internet. Among the various options available, notable ones include blogs, YouTube channels, and online stores. These platforms allow entrepreneurs to share their knowledge, passions, or products with a global audience, maximizing their earning opportunities. Practical examples of monetizing online content. Monetizing online content can be achieved through various strategies such as advertising, affiliate marketing, or sales of digital products. For example, a blog can generate revenue through Google AdSense ads, product recommendations through affiliate programs like Amazon Associates, or by selling ebooks, online courses, or digital products. Suggestions for identifying lucrative niches and building an engaged audience. To succeed in online ventures, it is crucial to identify lucrative niches where there is demand for specific content or products. This can be done through market research, competition analysis, and understanding the needs and interests of the target audience. Additionally, building an engaged audience requires consistency, quality, and authenticity in the content offered, as well as active interaction and engagement with followers on social media and in comments. 5. Dividend stock investment, generating passive income through equity participation. Explanation of how companies pay dividends to shareholders. Companies distribute part of their profits to shareholders in the form of dividends as a way to reward them for their investment and share the company's success. These dividends are paid regularly and represent a source of passive income for shareholders. Examples of stable companies offering good dividends. Stable and well-established companies in sectors such as utilities, telecommunications, and consumer goods generally offer good dividends to shareholders. Examples include companies like Coca-Cola, Procter & Gamble, Johnson & Johnson, and utilities companies like Duke Energy or Southern Company. Strategies for building a diversified and profitable stock portfolio. An effective strategy for building a diversified and profitable dividend stock portfolio is to invest in companies from different sectors with consistent histories of dividend payments. Additionally, it is important to consider the financial health of the company, its ability to maintain and grow dividends over time, and the geographical and sectoral diversification of the portfolio. 6. Franchises. Investing in proven business models. Discussion on the profit potential of franchises. Franchises represent an investment opportunity in proven business models, reducing the risk associated with entrepreneurship. By acquiring a franchise, investors gain access to an established operational system, brand support, and marketing, as well as ongoing training, increasing their chances of success and profitability. Practical examples of popular franchises in various sectors. Popular franchises in various sectors include McDonald's, Subway, Starbucks, food, cleaning services, car washes, services, and Obachikario, Mary Kay, retail. Choosing a successful franchise that suits the investor's profile and market conditions is essential to maximize profits and minimize risks. Suggestions for choosing a franchise suitable for the investor's profile and market conditions. When choosing a franchise, it is important to consider factors such as the initial investment required, royalty and advertising fees, support offered by the franchisor, the brand's reputation, and the local market demand. Conducting a detailed analysis and seeking professional guidance are essential steps in choosing the right franchise for the investor's profile and market conditions. 7. Investment in intellectual property royalties, monetizing creative assets. Description of earning potential with intellectual property royalties. Intellectual property royalties represent a way to generate passive income by exploiting creative assets such as music, books, patents, among others. The owners of these assets receive periodic payments based on the use or commercial exploitation of their creations by third parties. Investing in intellectual property can be done by purchasing copyrights of songs, books, movies, or TV shows, or by participating in creative projects such as crowdfunding for films, games, or apps. Another option is to create and license patents or trademarks for companies that want to use these assets in their products or services. Suggestions for evaluating return potential and mitigating risks. When investing in intellectual property royalties, it is important to conduct a detailed analysis of the return potential and risks involved. This includes assessing the creator's or project's track record of success, market demand for the product or service, and the terms of the licensing or usage contract. Additionally, diversifying investments in different types of intellectual property and sectors can help mitigate risks and maximize long-term returns. 8. Investment in fixed income funds, generating passive income with stability. Explanation of the different types of fixed income funds and their ability to generate stable passive income. Fixed income funds are investments that allocate capital to fixed income securities such as government bonds, debentures, CBDs, and letters of credit. These funds offer a stable source of passive income since returns are based on predetermined rates or indexed to the basic interest rate, SELIC or CDI, providing return predictability. Examples of fixed income funds. There are various types of fixed income funds, such as those investing in government securities, known as Tesoro Direto, or in private securities, such as debentures and CBDs. Additionally, there are fixed income funds that focus on different maturity periods and risk levels, allowing investors to choose those that best suit their needs and financial goals. Highlight for the safety and predictability of fixed income funds' returns. One of the main advantages of fixed income funds is the safety and predictability of returns. Since these funds invest in low-risk assets such as government securities or debentures from solid companies, the risk of significant losses are reduced. Additionally, return predictability is guaranteed by the nature of fixed income securities, which offer fixed or predetermined interest rates, providing a stable source of passive income for investors. 9. Investment in solar energy, capitalizing on the potential of the sun for passive income. Discussion on earnings potential with solar panel installation for energy generation. Investing in solar energy offers a unique opportunity to generate passive income by harnessing the potential of the sun for clean and renewable energy generation. By installing solar panels on residential or commercial properties, investors can generate surplus electricity that can be sold back to the grid, providing an additional source of income. Examples of how to invest in residential or commercial solar energy projects. Investments in solar energy can be made by purchasing and installing photovoltaic systems in homes, businesses, or agricultural properties. Additionally, investors can also participate in community solar energy projects or install solar panels on leased land for large-scale energy generation. Suggestions for leveraging government incentives and reducing installation costs. To maximize earnings from solar energy investments, it is important to take advantage of available government incentives such as tax credits, subsidies, and low-interest financing programs. Additionally, negotiating power purchase agreements, PPAs, with local utilities can ensure a stable source of revenue for investors over time, providing an additional source of passive income. 10. Investment in venture capital funds, driving growth with promising startups. Explanation of how venture capital funds invest in high-growth startups. Venture capital funds are investment vehicles that finance startups and early-stage companies with high growth potential. These funds provide capital and strategic support to invested companies, aiming to accelerate their growth and maximize return on investment for shareholders. Examples of successful companies funded by venture capital funds. Companies like Facebook, Google, Amazon, and Uber are examples of successful companies funded by venture capital funds in their early stages. These companies received significant investments that allowed them to grow rapidly and become leaders in their respective markets. Suggestions for participating in venture capital funds or investing in startups directly. To invest in startups through venture capital funds, investors can look for reputable and experienced fund managers who have a proven track record of identifying and investing in successful companies. Additionally, investors can also consider investing directly in startups through crowdfunding platforms or angel investor networks, providing capital and strategic guidance to companies in exchange for equity participation. Conclusion. We have explored a variety of 10 diversified investments that can generate passive income of $1,000 per month. From traditional investments to innovative opportunities, each option offers a unique path to achieve financial independence. Remember that the key to financial success is diversification and understanding your goals and risk tolerance. There is no single right path, but rather a combination of strategies that align with your personal goals. So, keep learning, exploring, and seeking investment opportunities that fit your profile. And don't forget to subscribe to our channel for more content on finance, investments, and tips for achieving financial freedom. Share this video with your friends and family who also want to tread the path to financial independence. Together we can build a solid and prosperous financial future. Thank you for watching.